I wasn't going to do this. I just said, you know what? I'm going over my charts. I figure let's spend a few minutes and discuss the week from last week, and not really the entire week in terms of booking profits. I'm just adjusting my screen here. Okay, this is better. You should be able to see the charts better here. I'm going to transition back. Okay, good. So I want to talk about not about our gains. I want to talk about a loss that we took last week. Anybody on YouTube, Twitter, whatever these guys pump out these I made $1,000 in 10 seconds videos, I get no value out of it. I get zero value out of it. I think that there's more value gained by doing some reconciliation of trades that did not work out well for you. Despite how well you are trading, every once in a while you're going to have to take a loss. And what I like to do on Saturdays is backtrack. Take a look at the trading week. What did I do well? What didn't I do well? So either A, I repeat good behaviors, and B, don't repeat bad behaviors. So we had some really good behaviors last week in that we booked profits when necessary. We sold out of the money contracts, bringing in income on our gold mining trade. Those shares did not get called away from us because we sold properly, and those options expired worthless, putting dollars into our pocket. So we had a very good week in terms of performance, but I want to talk again about a loss that we took. Before we get into it, I'm going to let people filter in here. I'm going to drop a couple of links. Tomorrow night being Sunday, I'm going to be doing, as we always do, Sunday night stock market futures live. That's where I will be discussing the stock market futures, how we appear to be setting up the week, and what are the trades that we're looking at for the coming week. And we're going to do a deep dive into those trades. So please join us Sunday evening, 6 p.m. Eastern Standard Time. There'll be two ways for you to get notified. I'm going to drop links in here. Two ways for you to get notified of when we go live. One is that you could click the subscribe button on YouTube, and that'll notify you via email of when we go live, or if you are on YouTube, it'll notify you, like a little bell goes off, whatever. And the problem is that the notification via email is delayed, and you may miss the first few minutes. So I will pop in an email list. I send out a 15-minute alert in advance of us going live, and I'll pop that in here so you can click on that. Hey, Trent, good morning to you. All right, so that'll enter you into an email list. We hate spam too. You will not be spammed. So I'll send out a 15-minute warning of when we go live, or we're about to go live, so you don't miss anything. Otherwise, just click the subscribe button, and there's a bell. That bell button on YouTube, click, I think it's like follow all or whatever. You get reminded of when we go live. So that's one way. On Twitter, I think it's automatic that you're notified. Twitch, same deal. And with Facebook, I believe it's the same deal as well. So if you're watching in those venues, no need to do anything. But if you're waiting on YouTube for us to go live, the best bet is to enter your email address. And of course, again, we hate spam too. What else do we have? Oh, if you have a minute, and here's a link for the subscribe button as well. Let's throw that in there. Trent, I'll get to your comment in a second, so I'm just getting started here. There you go. And I'm going to be using TrendSpider. If you want a 25% discount on TrendSpider, simply use this link and discount code. Yes, I catch a piece of it for transparency. And there you go. Okay. So TrendSpider 25% off. We go live tomorrow night, and then we're going to have a private group members session. We have a 14-day free trial offer, so join us tomorrow night for our private group session where we do a deep dive into basically whatever the members want to talk about. It's their time. If they want to bounce ideas off of me, I'm there for them. If they want me to go and further depth on the stocks that we're watching or positions, I'll do that for them as well. So it's an open forum. It's really an open mic night for members, long story short. So trade coaching. All right, so let's go to the chart of, or the trade of Caterpillar. And Trent, I'm bearish gold. You're bearish gold? No. Don't go. Why are you bearish gold? Hey, John. Good news. Thanks, John. Appreciate the feedback. Thank you. Trent, why are you bearish gold, man? We'll take a look at that chart. Okay, so Caterpillar announced earnings. And here was the headline. Caterpillar earnings missed badly. Dow Jones stock slashes outlook. So the earnings report was not good. We also know that the phase one deal with China is really not a phase one deal. It's really just a face-saving measure on the part of the president and the administration. So I didn't believe that the China growth story was going to help them, or China trade deal story was going to help them. So I looked at this and I said, okay, so we have a catalyst here to the downside. And I said, let's go over to the monthly chart. Let's take a look at Caterpillar, because it sold off and then it began to rally. And I said, is there an opportunity here? So I went to the monthly chart and I saw that we had peaked out on Caterpillar going back to January of 2018. And you could see that on this monthly chart, we have a declining upper band of resistance, and we were flirting with a breakout here. And I said, you know, the news is not good on the headlines. The China trade deal is not good at all, because there's really no substance to it. So I was betting that the shares of Caterpillar would sell off and that we would not get a monthly breakout. And you can see that we were higher on the month for October, but we did pull back and we did not ultimately break out. So the rationale for getting short of Caterpillar was poor earnings, poor technicals in the instance, or in the fact that we were trading up and into resistance level, and with the news, the probability of a breakout was unlikely. So we just knew that we would have to keep a stop loss if we were to proceed to a new monthly high on Caterpillar in the month of November, if we saw a continuation move higher. So that's on a monthly view, but the trade didn't take long to go against us. Weekly chart. So we got long of Caterpillar on the 23rd at 135.84. And that was the week of the 21st. Now the problem is that on a weekly basis, we broke out. You got to get positioned in advance of hyperinflation. Hyperinflation is not the precursor for gold rallying. Stagflation is, okay? So we'll go to a chart of gold in a moment, Trent, and we'll talk about that, because I think that we're putting the cart before the horse when it comes down to inflation in the economy. So we'll talk about that in a moment, okay? So you could see that last week we broke out on a weekly basis, and right away I knew I was wrong. I knew it was dead money, and I told members, we're not going to add to this position. I was wrong. You need to be able to look yourself in the mirror and say, okay, you were wrong. You're not going to try to rationalize, I'll add on strength to my short position because I know it's got to be right. No. That's stinking thinking. What you need to do is identify the fact that, hell, man, you were wrong. Dead wrong. Because what happened here? Bad headlines. And what did Caterpillar do? It broke out. So the market told me, Desmond, you are wrong. Be all the contrarian that you want. The market just slapped you in the face. B slapped you. And you better find humility real fast, or you're going to get punished for it. So I discussed this with members that we needed an exit strategy hyper fast. And we weren't going to wait for the shares to break down below support or hope that they would break down below support. We needed an exit strategy, and that exit strategy was this. On a daily chart, we saw a doji formation, no new follow-through on the 29th, and I expected a pullback on the markets after the Federal Reserve rate hike. I said, if we pull back and we retest the breakout point, which opened up on the 28th, we were going to take that opportunity to exit our trade, because in all probability, if this retest holds, we are going to break out. So we took our loss on the 31st, on the 31st at 142.30, and we moved to the sidelines. Now, when are losses good? When losses are good, it gives you the warm and fuzzies. It really does. Because we stopped out here because we knew we were going to get, or we predicted that we were going to get a pullback and a retest. And that was a bullish setup if the shares did not break down below support. And that wasn't our bet. We weren't going to hope when we should fear. And sure enough, yesterday, being the 1st of November, not only did we break out on a new daily high, we broke out on a weekly basis. Not only that, on a monthly basis. So thank goodness that we booked that loss. So that's when losses are good. When you use your logic, when you're using the charts to trade right and not hope when you should fear. It's very, very easy to get lured into a bad earnings report and speculate that, you know what, this China deal is, it's a joke, which I believe it to be. There's no deal out there. Earnings were poor. It's a fact. It's poor. Forward-looking guidance for the year is not good. So I can have all the reasons in the pro column to get short of Caterpillar, but it only takes the market to send you a signal that we just broke out on a monthly basis to say, you know what, I got to get out of this locomotive that's coming down the tunnel. You know that little light at the tunnel in the cartoons when you were a kid and you're standing on a train track? If that light begins to grow, you know that train is gaining speed and momentum. And if you don't get off the track, you're going to get hit like a ton of bricks and you're going to get flattened by the market. So I chose not to get flattened by the market. We took a small loss. We didn't add to a losing trade. Those are the behaviors that are correct. So I'm more than happy to go live on YouTube, Twitter, Facebook, wherever, and say we were wrong on a trade, tell you why, and it's exactly what we do moving forward and do the same thing over and over again. We learn from our losses, not from our winners. So let's, we have a couple of questions in the box. All right, so Trent, I want to get back to your gold call here. I'm bearish because there's no hyperinflation on the U.S. economy is strong, and the hedge funds have huge long position. There are about 7 contracts in every 1 contract. Short. All right. So here's how I look at it, Trent. Let's bring up gold. What you're doing is I could be wrong, right? I don't know it all, right? And if I went into each trading day knowing or saying that you know it all and my ego is all full of myself, I couldn't do a video like this and have a conversation with you about a loss that I took. Because more than likely I would have let that loss run. I probably would have added to a losing trade and I would show a lack of humility. So I'm not going to look at this chart right now and say to you, Trent, you're absolutely wrong in your thesis. You could be right for all I know. So you bring up some points, okay? I'm not here to say that they're valid or invalid. All I'm here to do is to say that, okay, what are the charts telling us? What is the probability that we will either see a continuation move higher or a breakdown to new lower lows on gold? So let's talk about that for a moment. I am long-term bullish, and everybody out there that's known me for more than a month, you know I'm bullish on gold. I want to buy more of the gold mining trade. Believe it or not, I don't own a single ounce of gold. I trade the gold miners. I am looking to buy gold, but I like the beta on gold. I like the fact I could sell covered calls on the gold miners. I'm sorry, I like the beta on the gold miners. Sorry about that. Beta is volatility. It's greater than the price of gold. And I could sell covered calls again or sell puts. If I get called out of my position, I could sell puts to get long yet again of gold. So I don't want to digress here. Let's talk about the chart of gold. You have Germany, which is now a net buyer of gold. So you have central banks out there, Trent, that are bringing up, they're soaking up supply. You have China, you have Russia. They're not net sellers, they're net buyers of gold. You have Germany now, first time in 21 years. I went over this chart, I believe it was last weekend. They are buying gold, their central bank. So the supply-demand argument, I'm not ready to say that that is a good thesis to use to either A, get short of gold, or B, to get long of gold. I would prefer to side with the charts and the macroeconomics, and the macroeconomics are not good. You have gold in Canadian dollar terms and Aussie dollar terms at all-time highs, and I think that's exactly where we're going with gold in dollar-denominated terms. And all you need to do is take a look at the U.S. dollar, because gold is priced in U.S. dollars. All you need to do is take a look at the U.S. dollar, and the dollar found resistance on a monthly basis. We broke down outside reversal bar in the month of October. I don't think we have a continuation breakdown yet. Maybe we do. Low of November, 26.56. Low of, no, we don't have a continue. Oh yeah, we do. No, we don't. We don't have a continuation breakdown yet, but we probably will. Let's go with a daily chart here on the dollar. All right, so if you want to argue and say that, you know what, maybe we're basing here on the dollar and that we will set up a W formation, okay. We'll see when that W formation breaks out above the pivot point, and then we may see some weakness on gold. When I go shorting gold, no. The dollar and gold have been trading less inversely than they were this time last year. So the dollar is not a good reason at current to go adding or shorting gold. I think gold is just acting on its own very, very well. Let's go to a monthly view of, this is the GLD. Let's take the trend lines off for a moment. We'll go to a monthly chart. And if you want to throw up your, hey, CV, good morning to you. BAC, we'll go over BAC for you. Colton's a member, a valued member. All my members are valued members. Okay, so Colton, we'll go to BAC in a moment for you, brother. All right. Let's, here's the monthly breakout on gold. All right, here's a huge base on gold. If you were to say to me, you know, Bob, back in August, you know, we're leaning technically up into the third standard deviation Bollinger Band, I would have listened to you in terms of technical shorting, for technical reasons to short the market, and you would have been accurate for a swing trade, not for a long-term trade. I think that we are going to break out, and I think that we already, what's the high of the month? 142.90, the high of, no, we're not at a monthly high yet on gold. We're very close to it though. The path of least resistance appears to be the upside here. So technically, the price action for gold does not favor bulls. And when you take a look at this chart on a weekly basis, you know, we'll throw over the weekly support and resistance levels. That's not really adding value here. We have a weekly breakout of a wedge formation. I think that we are breaking out to the upside. So I would encourage you not to go shorting gold, especially if we put in a new weekly high next week, which I think we're going to. Perhaps we'll pull back and get a retest of the breakout point. But if it holds, if we close out next week above this now current support level was resistance, we're probably going to go a lot higher on gold, probably new 52-week highs at a minimum. So I would not go shorting gold here. I'm very, very bullish on gold. Daily chart. All right, so very tight Bollinger Bands here. I would strongly encourage not to go shorting gold here. And if anything, I would be a buyer of gold on a new weekly high next week. So, and we'll be looking to add more to our gold mining trade, no doubt about it. So those are my thoughts on the gold trade. If you have a reason why you technically you want to short gold, I'll be more than happy to listen to it. We'll talk about it, but I wouldn't use the supply demand aspect or the hyperinflation aspect of the gold trade as being a reason to not go building now. I think that you have hedge funds out there, the smart money, they're nibbling on gold. They see what's coming down the track. This situation that we're in at current is just, it's going to require a new monetary order. There's only one real source of money out there, and that is gold, silver. And the day that Nixon took us off the gold standard, the dollar was, for the most part, that signed the death warrant for gold. Yeah, good to hear, Trent. Smart move. Yeah, definitely wait on that trade. All right, let's go to, I hope I didn't over-elaborate on that trade, but I'm just passionate about the fact that I think that gold is moving higher. I don't want to see anybody lose money. But thanks for bringing it up, and thank you for the conversation. It makes this far more interesting when I do this and I have engagement. All right, so let's take a look at BAC. I haven't taken a look at BAC in a while. This is Bank of America. How are earnings on BAC? It's been a couple of weeks. I forgot how they were. Oof. What I'm finding fascinating about the gold trade, not the gold trade, the bank trade at current, is that despite the fact that you saw a huge beating on the 10-year yield last week, you saw bonds rally, you saw the yields drop down, the banks held up, and these tight margins are not good for the banks. But what they're probably going to make money on is the fact that their trading operations are going to be far more profitable because the government's giving them a lot of room to take more risk with depositor money. We've been here before. This is not going to end well. But in the short term, the markets are going to reward the banks. And taking a look at BAC on a monthly basis, it looks as though we're going to break out here on BAC. It's a very pretty chart. So let's talk about it. We'll do a deep dive. And this is the kind of conversation we'll have with members tomorrow on the private group session. Colton is a member. He joins in. We had some technical issues on Thursday night, and Colton wanted to join in, and it didn't work out well. So I apologize for that, Colton. We'll get it right tomorrow night. And let's go through it. Let's overlay here some trend lines. Let's see what we have. All right, so we broke out in October, and we have a continuation breakout so far in November. So we're seeing a resolution to this consolidation, and that resolution is to the upside. So this chart here on a monthly basis is clearly signaling that the path of least resistance is to the upside. Now, what I'm doing here is what I like to see, and given the volatility of the markets of late, I'm not going to be the least bit surprised to see it. What I want to do here is I want to set an alert, because there's no way I'm going to remember this, and this is one of the greatest values of TrendSpider. So I've set up my alert here. I want to know if we get a pullback and a retest of this support level. So when it touches, I get alerted. And I want to know within 4 hours of it occurring. And I also want to know when we bounce off of that support level. So we're going to keep this active for 8 days or so. And there you have it. So that would be a great risk-reward entry point for BAC. And I would add more to that trade on a continuation move higher on BAC monthly basis. So the trade from a monthly view is looking really good. Your stop is at 31.24. I don't mind manual stops. I'm in favor of them. 31.24. Where are we at here? What was the low of the week? It all depends upon your entry price. I favor putting a stop loss right below the support level here, which is at 30.18. But to do that on a percentage terms, that would be if you bought them on Friday afternoon at the close. On a percentage term, you're letting your loss run a little bit. So I wouldn't add here if I was going to use a stop right below this support level in black. So your 31.24 level, I think it's a bit tight because I think that you're going to get taken out. I would use your manual stop on a closed below this support level here, and that's at about $30.30 per share and declining. I'll send this over to you. Also, what you could do, let's see if this makes sense. Is when you get a continuation move higher and you get a pullback to this lower band of what will be support in the future or should act as support in the future, put your stop loss right below this rising lower band of support. It's too early in the breakout to do that. So let's send this over to you. Okay, that works, CB. That makes sense, yeah. Does that opens up well for you, CB? Colton? I keep calling you CB. I know your name. Colton. That works out, that chart link? I don't think it's sharing on Twitter. I'm going to see if I can share it on Twitter. Let's do this. All right, I just posted that link on Twitter. Thanks for the like on Twitter. And you folks on Twitter, if I could ask you to retweet, share with a friend. I have good partners over with TrendSpider. They certainly promote me enough. But I'd really like to get organic growth going from the current base. So thanks for joining in, and please share with a friend. Get the word out there. And if you folks are watching this on YouTube, please subscribe to the channel. I put some links in the video chat box there if you want to subscribe to the video. Also, if you want to enter your email address on the email list, you'll get notified of when 15 minutes before we go live. So that way you don't miss any of our Sunday Night Futures Live or any of our videos. Good to hear, Colton. Thanks, man. That worked out? Cool. Okay. And with that, folks, I went a little bit long here. Join us Sunday Night Futures Live tomorrow night. I look forward to seeing you. Enjoy the remainder of your Sunday. And everybody have a really great remainder of your weekend and have a profitable trading week. Be well.